All right, it's the 20th of June. It's a Friday, and we've got about 20 minutes, just over 20 minutes to the NY Open. Go to the charts in a bit. Okay. All right. Yesterday was a US bank holiday. Let's take a look at the calendar before we start. So, no news today. There's nothing today. Should be a regular trading day. Shouldn't have too many surprises unless there's something to some news with regards to the current conflict between Israel and Iran, right? Unless there is some news with regards to that, we should have a regular trading day. Just a second. Okay, right. This is where we left off on on Wednesday, right? We said was price could push down next to 3328, right? And for the FOMC meeting minutes on Wednesday, I did give out a setup. I took that setup. I'm still holding one of those trades from the top. I'll share that in a bit, but these are the areas that price was coming down to once we got to that 1 hour. If you watched Tuesdays and Wednesdays stream, if you were here, if you were here during the streams on Tuesday and Wednesday this week, then this all would make sense. Or you can just go back and watch Tuesdays and Wednesdays stream. The first 10 minutes of the stream is enough. You should understand the analysis. Price came to a fresh zone here. There's a 4-hour zone and a 1-hour zone here that price came to. That's marked with the green box here. We tapped. I'm not going to go through all of those zones right now because I did that on Tuesday and Wednesday both. Price tapped. I said price will tap at 3450. It did that. It rejected. We have a strong daily bearish close, and I said price would be heading down to 3410. 3374, it did, and then next would be 3328 if there is volume to push down, right? It's very likely that we're heading there. So let's get rid of these. 33, just keep this in mind, 3328, okay? 3328, let's get rid of all of that. Let's get rid of this box. Right, and now let's take a look at the chart. We're going to try to do a weekly candle prediction here, how the weekly candle could close, right? I do that every Friday. Um, I try to do a prediction on how the weekly candle will close, and based on that, how the daily candle will close, and based on how the daily candle will close, then we try to take a lower time frame trade in that direction, right? That's how Fridays work. So price is heading towards on the daily. We'll start with the daily and then we'll go up to the weekly. Okay, we're heading towards the decision level. This level right here, 3332 below 3332, right? Below the triple 32 level, there is a daily demand zone, a drop, two basin candles, and a rally, drop, base, rally, right? And that's very likely where price is heading to on the daily time frame. The reason that's a decision level is because that level, that demand zone, has taken out supply here, the rally, a base, and the drop, and has taken out this supply here. There's a rally, a base, and a drop, right? Has taken out supply here, has taken out supply here. Now, if there's a lot of volume, we could push through that, but it's very likely that we are going to get a reaction there. If price gets there to that level around 3326, 3327, 3328, around that area, we should get a reaction to push back up, right? A reaction may not be a reversal, but should at least be a reaction there because that's a fresh daily demand zone the price hasn't visited yet, right? So if there is volume, we could get there today. That's about 250 pips away. We could get there if there is volume today. Now let's go to the weekly time frame. On the weekly, we are bearish, right? The weekly candle has moved um, about 1,100 pips. The body of the candle is about, what, so 830 pips? Good. Okay, so now it's unlikely that this weekly candle is going to go up 850 pips and flip bullish. Very unlikely. So it's likely that it's going to close bearish, right? The weekly candle is going to close bearish. Now, is it going to close with a smaller wick like this? Or is it going to push down and then push further up and close with a bigger weekly wick for the next week to fill, for the next weekly candle to fill, right? So is it going to, so the question is it going to, so the two scenarios are, is the weekly candle going to close with a, sorry, just a second. Yeah, is the weekly candle going to close with a bigger weekly wick? That's scenario number two. Scenario number one, is it going to close with a small wick? Or scenario number two, is it going to close with a bigger wick? If it's going to close with a smaller wick, very similar to what it is now, around 3350 or below 3350, then the daily candle will need to continue to close bearish, right? We'll need to continue to close bearish. We'll need to continue to push down, which means we could have a push back up, grab liquidity, and then continue to come down. That is scenario number one. We could push back up to a liquidity level, grab liquidity, and then continue down and close around 3350 or below that. That's for the weekly candle to close a small wick. If the weekly candle has to close a larger wick, price could push down and then start to pull back up. That's possible. We could push down first and then start to pull back up and close above 3350, right? Then we would have a larger wick, about a 200 plus pip wick, right? In that case. So price would have to push down first, grab liquidity, and then push back up and close above 3350. Those are the two scenarios, right? That I'm going to be watching for until from now, starting NY open, not really NY open, maybe about 30 minutes, an hour after NY open, right until around 11 or 11:30 a.m. EST. That's what I'm going to be looking for, right? So now we're like 10 to 8 EST, 7:50 a.m. EST. So for the next 3 hours, 3.5 hours, or 4 hours, let's say 4 hours, that's the setup, right? So around, you can even say the London close. The London close is around 12 noon EST. I'm going to be watching for one of those two setups, right? The stream is going to obviously be here for a couple of hours, but uh, the two setups that I explained, the two scenarios that I explained, are what I'm going to be watching for until around 12 noon EST, right? That's the London close. Okay, let's go to our trading chart. Before we draw our zones, we'll do a quick recap of what happened on Wednesday, of the trade idea that I gave. Wednesday, obviously, we were ranging. If you watch Wednesday stream, if you're there on Wednesday stream, or if you weren't, I recommend watching that, because price range for about 46 hours or 48 hours, I think, about 46, yeah, about 48 plus hours, nearly 50 hours. We were in a range here and we identified the top of the range, the bottom of the range. We drew support and resistance. All of that was done, and then during the stream, price created 30-minute resistance. All right, price came up to the liquidity candle, and I said all of this. I said if price will very likely close above resistance. This is all drawn during the stream. This is the chart from Wednesday. I haven't changed anything. Price would close above, and then if it starts to close back inside or at or inside this resistance level, this gray box, that's your signal that the cells are going to work, right? I said that very clearly. So we also, and that happened, and also 30-minute resistance was formed, a tradable 30-minute back candle closed, right? So we draw the fib. I think I'd drawn the fib as well during the stream. This was the 15-minute candle that took out this high. This candle took out this side, drew the fib. And then I said, wait for FOMC. And we didn't take any trades during the stream. I said, the move is going to happen during FOMC. I'm going to be trading FOMC, I said. Obviously, I didn't stream FOMC, but I said I was going to be trading. And I'm going to be looking for trades at the extremes, right? Above the resistance and below the support. So price perfectly tapped here. I placed pending orders when we came and we were struggling. Then and we didn't push down. We came here, we came here during the NY session about 2 hours after NY open, about no, about 3 hours after NY open. We came here, but that was too early because we're going to have news later on. So during news we came here and we tapped. So I placed pending orders at Sniper and at Optimal. I placed pending orders and I closed the Optimal trade, I think around 3367. That was about 270 pips. And the one at Sniper, I'm still holding, right? And the reason I'm holding it is I'm holding it to where price could be heading down here. I given that level. That level is 3328, right? If you remember when the stream started, I had three blue lines here, three dotted blue lines. The last line was 3328. That's just above here, 3328. That's there, just above this demand zone, drop base rally, the daily demand zone, right? So that's where I'm holding. The reason for that 3328, you can go watch Wednesday's stream and even Tuesday's stream. It is because of price mirrors what's on the left. Not all the time, but majority of the time when it comes to a fresh high time frame supply or demand zone, you can expect price to mirror what's on the left. Let me just quickly do it here. Yeah, let me just quickly do it here. If you want here on Wednesday, um, let's go to the 1 hour chart. Yeah, so this is the zone that we were talking about. We spoke about this zone several from the beginning, since the beginning of the week. Even last week we spoke about the zone. The price will be heading there, and it did. It tapped 3450, and the first place that it would head to is this. I said 3410. Then it pushed up, and the next place I said we will head to is 3374. Why? Because that's where the next support level is, right? Support and resistance. And then if we start to close below 3367, I said this on Wednesday very clearly, if you start to close below 3367 or below 3374, we're likely heading towards 3328 because that's the next support level and the resistance, the next SR level, right? So that's the reason I have my final TP at 3328, which is about 680 pips, I think. Okay. Okay. Let's see if we can get there. Anyway. All right, let's get rid of all of these and start our zones. And I've given this as a stop loss. So the that trade had like I think the snipe entry had a less than 10 pip stop loss because I entered at, my entry is, where's my entry? Is 3395.8. 3395.8, somewhere there. Yeah, just somewhere there I entered. So yeah, about 8 or 9 pip stop loss, about a 9, let's say about a 10 pip stop loss, right? I entered right there when price just up there. I placed a pending order. I got slipped, I think, got pushed, and I got a better entry. That was great, and that was it was a zero float entry. It's good to take zero float entries sometimes when you get lucky, I guess. Um, but I was anticipating this level to work because we had tapped this level about, this was the 8th time, right? And I did this on Wednesday as well. Like, we counted the number of times we've been here. This was the 8th time price came up, and we couldn't break. We didn't break this level, so we were holding this liquidity candle. So then when we formed this 30-minute resistance and tradable 30-minute, the back candle closed, I was anticipating price to work and push down at least to 33 6.7 first, and we pushed there, and then we pushed up over 200 pips, and then we continued down after that. Yeah, yesterday in the Asian session, right? And we're still trying to push further down. Hopefully, we can get to 3328. Yeah, 3328. All right, let's get rid of all of these. Okay. All right. Let's start. We've got a supply zone here. This is a rally, three basin candles and a rally. Prices come deep into it. It has come here, right? That's the zone. Extend this to the right. Today's 20th. Okay. And we have a drop and a rally here. So that's a 4 hour. There's a drop and a rally. So there should be a base there. We're going to bring it down to that base, right? And see if we have a base there on the 1 hour. Yes, we do. We have, let's look at the 30-minute. Yeah, we have a drop, two basin candles, and a rally, right? So close there is 527. Okay, perfect. The liquidity candle, we've come deep into it. We haven't gone below it yet. Uh, let's let's leave this here for now. Let's leave. So that's all that's left of the zone. It's no longer high liquidity zone because prices crossed the 50% mark. Obviously, we just have a few pips left of the zone, but still we haven't broken it, so I'm going to keep the zone there. Okay. And below that is this. Now, I've always said this, whenever you have two liquidity candles stacked up against each other, when there is volume, price is very likely to go through both of them. And that seems like that's what's happening. We're going through one, then we could go through this as well, right? Okay. That's a demand zone there. That's a high liquidity zone. We have this marked earlier on this week. Um, and then I'm going to just extend this as well, just for good measure, right? Unlikely price is going to come all the way down there, but just in case. Okay. All right. Let's look at supply. Got 3 minutes to the NY open. We've got plenty of time. Okay. So for supply, we have a drop. All of those are basin candles. That was yesterday because there was a US bank holiday, so price ranged mostly. We pushed down, we pushed back up. 1, 2, 3, 4, 5, 6 basin candles. It's about 24 hours we ranged. And then in the Asian session, we dropped today, right? So you can see how Yesterday being a US holiday, exactly 24 hours, price just ranged. So we go, just mark that zone out. There, that's the zone, right? Clear. Drop, basin candles drop. So this high is 798 and this open is 468. Let's take a look at this on the 1 hour and 30 minutes as well, since we crossed a weekly SR level. Yeah, we're good on the 1 hour, 30 minute. Yeah, also good on the 30 minute. That's a clean zone. Okay. And now, further up, we have this, a drop. All of these are basin candles right up to this. This is the leg out. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 base in candles like that. That's the base, right? Price has come into it, so we're going to push it 270 pips, and this is 230 pips. That's okay. So we're going to push it up so we don't overlap the zones, right? So this high is 798. And now that's a 4-hour zone, right? 4-hour supply, and so is this 4-hour supply, right? Those are the zones, okay? Those are the zones. Now, let's take a look at this zone. We have a new supply zone. We don't have new demand zones. This is an old demand zone. We're pushing down. Yeah, we're pushing down, back down, heavy, push down. And then this is the NY open as well. Let's take a look at this zone and see if this is a high liquidity zone, right? So let's go to the 1 hour. Yes, so there is a drop and a rally here. There's obviously a base there. Price has pushed down, taken out that, so making this a high liquidity zone. Okay. Now, let's take a look at this area and see if we have a liquidity candle in this zone below. It's no longer a high liquidity zone, but does it still have a liquidity candle? 30 minute, maybe this one here. Yeah, that's the liquidity candle. So I'm going to extend it to the right, but we're going to bring it down. Right, this engulfing candle right here. Let's check the 5 minute also. Yeah, 15. Yeah. Okay. Yeah, this 30 minute candle. We'll keep it to that. Yeah. This high, 46.15. Okay. Let's take a look at this area and see if we have a high liquidity candle in here. Start at the 1 hour. Also here, there's a zone here because we've crossed a psychological round number here. There's a drop, a base, and a drop. We have to mark that as well. Can't ignore that. Whenever price crosses a weekly SR level or a psychological round number, got to mark that. Okay, let's take a look at that on the 30-minute. Yeah, perfect. That's the zone. On the 1 hour is good. So this high is 0.58, close to 4.3. Okay. Yeah. Yeah. So is this? Yeah. This too is a high liquidity zone. On the 1 hour, on the 30 minutes, it's clearer. You have a drop, a base. This is a single base in candle. This one right here, and then a rally, and price pushed down and took out that low. Okay. Right. Perfect. Now let's start here. This is where price is very close to this level. It also has a liquidity level at 3350. Let's see if there is a liquidity candle here in this zone. Let's start with the 1 hour. On the 1 hour, that's the largest candle. Let's start with that. Let's go to the 30-minute. $82 pips, 62. Yeah, keep this for now. Let's look at the 15-minute. $49, 52, 82. Yeah, it's that candle right there. Let's take a look at the 5-minute also. Yeah, that's the one. 439624. 1 second. Okay, perfect. Yeah, and we've tapped it. We've tapped the liquidity candle in the London session. Asian session. Yeah, and then London session. Okay, let's take a look at the one above. The zone above, that's a 230 pip zone. Largest bearish candle. 150, 160, 130, 170. Let's go to the 30-minute. 140, 140. Also 140. Let's take a look at the 15-minute. 140, 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140. 140 107, 12. Yeah, this one here. 136. Mm-hmm. Yeah. Yesterday Asian session. Yeah. Yeah. Let's take a look at the 5 minute very quickly. Ninety pip drop. Hmm. Yeah. Let's go with this 15-minute candle right here. 706,349. Okay. All right. That's it. This is from previous. I'm just going to extend that to the right. All right. Now, let's take a look at what price has done in the Asian and London sessions. Yeah. So these are the zones. So we have a 30-minute supply zone here, a high liquidity zone. We have a high liquidity candle there that also covers the EMAs. We have a new zone, 4-hour zone here that also has a liquidity candle, but that's further up. I don't think price is going all the way up. It could. You never know. If it doesn't have enough liquidity to push down, then we're going to push back up. And then we have a heavily tested liquidity candle and a zone right here, which price could push through. If it pushes through this, then we're coming straight to 332 and deeper. We're going to push through the other one as well, right? Okay, we're very bearish right now. Very bearish right now. On the weekly, bearish on the weekly, bearish on the daily, and we're bearish on the 4, right? And we're even bearish on the 1 hour. Okay. Right, let's drop to the 15-minute. Let's take a look at what price has done in the Asian and London sessions. Okay, this is the market open. The market opened at 33.70. Okay. All right, let's take a closer look at what price did. Yesterday, we ranged, right? Yesterday was a bank holiday. Price had pushed down the previous day, and then we pushed back up. The London session yesterday, and then NY session we just moved sideways. So there was nothing happening in the in the NY session yesterday. Then the market opened here. We pushed back to the EMAs because we were ranging and we were above 3367, but yet overall we were bearish, right? The high time frames are bearish because you can see that price is clearly below the EMAs, it's trading below the EMAs. But we were above 3367, and then we pushed to the EMAs. We created the Asian high, 30-minute resistance right there, 30-minute resistance, and then pushed back to the EMAs, tried to come back up, couldn't, went straight down, right? On the way down, created a new liquidity candle, pushed past that liquidity candle, past 3350, down to the liquidity candle here, right on the left. We tapped it, we created the Asian low, pushed back up to this newly formed liquidity candle. We created the London high, pushed back down to 3350, closed below it, pushed back down and closed at the Asian low and inside the liquidity candle, and pushed further down and created the London low. Formed 30-minute support, right? Clear 30-minute support, pushed back up past 3350, came to the zone, came back down to grab liquidity once more from the liquidity candle right here, grabbed liquidity, closed above 3350, and came back to the liquidity candle and tapped the EMA, rejected the London high, formed 30-minute resistance, clear 30-minute resistance, and trying to push back down now to the London low, right? We've rejected the London high. We formed 30-minute resistance here, 30-minute resistance here. We've rejected the London high. This is the London high. We've rejected it twice, closed below it twice, forming 30-minute resistance. And now we're trying to push back down to the London low. All right, we've tapped the liquidity candle once more. Now, let's see what's happened. We formed resistance in before pre-NY. Okay, I'm not interested. Here's the um, here's basically what I'm planning to do right after the analysis. Just one second, save this. I'm not interested in taking buys, right? From the weekly down to the 4-hour, we're very bearish. I'm not interested in taking buys. Even, you could say even the 1 hour is debatable whether it's bearish or bullish, but straight down from the weekly down to the 4-hour, we're bearish. The weekly candle I said is going to close bearish, right? It's going to close bearish. This is not going to push up 850 pips to close bullish. It's not going to happen. So therefore, I'm reluctant just for those two reasons, because 3 high time frames, the weekly, daily, 4-hour are bearish. The weekly candle is likely to close bearish. That's the second reason, right? I'm not interested in taking buys here, at least not now, at least not right now. Later on, if we push down form 30-minute support. If you come further down, um, if you form 30-minute support later on, means about maybe 3 hours from now, 4 hours from now, as I said at the beginning, towards the London close, right? Around 11 a.m., 11:30 a.m. EST, 11:30 a.m. EST. Maybe if you push further down by then, we grab liquidity. You see a liquidity wick, a large wick, right? On a push down, price creates a very large wick. Then maybe you could look to take buys. But keep in mind, today's Friday. It's the end of the week. Don't try to trade till too late to the second half of the NY session. What I'm interested in the first 2 to 3 hours of the NY Open, or even after NYSE Open, is to take sells to come down. So that's all I'm interested in. I'm not interested in buys. Even if you have, even if there, I mean, even though there is 30-minute support formed here and price could push up, come grab liquidity, do that again. I'm not interested in taking buys because it's a counter trend trade. Because it's just not a it's not only a counter trend trade. I do take counter trend trades. The issue is the weekly candle is going to close bearish today. So why trade against the weekly candle, the bearish weekly candle? Why try to take a buy against a bearish weekly candle, right? It's very likely that it's going to close bearish today. It's not going to push back up 850 pips and close bullish. There's no news today, so we are going to close bearish. So it's best to wait for sells. So if I'm to wait for sells, then price has to push back up and create 30-minute resistance because we're not too far away from the EMAs. We're only like less than 100 pips, about 85, 90 pips right now, about 80, 90 pips away from the EMAs. So price needs to push back, pull back, or push back, or retrace, whatever you want to call it, form 30-minute resistance. A tradable 30-minute back candle needs to close for me to take sells because this 30-minute resistance that was formed was before pre-NY. This is IC markets time 1400 hours is pre-NY, and this 30-minute resistance was formed before that, right? So to me, I don't consider that to take a trade right now. I want to see new 30-minute resistance form, or at least it should have formed inside pre-NY, right? Which means 1400 hours or after, 1400 hours or after. So I'm going to wait for price to pull back, create some sort of structure, some sort of resistance, and then look to get in on the sells to come down. That's the plan. That's the plan. That's all I'm planning to do. If price doesn't do that, that's very possible. That's the second scenario. If price doesn't do that and pushes straight through below this liquidity candle low, which means this one low, this low here, below 33, 39, 83, if we cross that, we then could have a pullback. If you break that, then we can delete that liquidity candle and that zone, and we could have a pullback. On the pullback, I'll look to take a sell. If we form resistance, maybe 15-minute resistance, because if you break this, then we should be about close to 200 pips away from the EMAs, right? Then we can pull back, maybe wait for 15-minute resistance to form from a liquidity level, and then take the sells to come down, right? Those are the two sell ideas that I'm going to be waiting for today. And then later on, if I'm trading, I doubt it, I'm going to be trading 4 hours from now, 4.5 hours from now. But if price pushes, and if you are, and if you're watching the charts 4 hours from now, around 12 noon EST, 11:30 a.m. or 12 noon EST, then maybe, and if price does come to liquidity to one of these liquidity levels, and there's a liquidity grab, you see a big wick and price pushes up, or you see a 30-minute support form and a tradable 30-minute bull candle close, then you could look to take buys to go up. But remember, the buys may be short-lived because we're very bearish right now on the weekly, daily, and the 4 hour, right? That's the plan. Right now, there's nothing to do. You just, I'm at least for me, there's nothing to do. I'm waiting for 30-minute resistance to form, take a trade to come down. Okay. I'll be back in a few minutes. Yeah, we're back in a few minutes. Mm. Hi, welcome to the streams. Hi. If you if you just joined, then we're not doing anything right now because there is no setup to trade. But if you are interested in the analysis, then I would suggest just watch the first maybe 15 minutes of the stream, um, or maybe just watch even the last 10 minutes of the stream. Just watch the last 10 minutes that just passed, and you'll get an idea of how I drove the zones and what I'm waiting for today. And if you watch the first, if you weren't here for at the beginning of the stream, just I would recommend that you watch the first. Okay, great. You watched the entire thing. Fantastic, fantastic. Right. So yeah, so that's what I'm waiting for. I'm just waiting for the weekly candle. That's the reason on Fridays I do a weekly candle close prediction, right? So that based off that, I look to take a trade in the NY session or towards the end of the first half and the beginning of the second half of the NY session, right? So the first half of the NY session ends around 11:30 a.m. EST, right? And the second half begins around 12 noon EST, right? Around the London close. So if I don't get a trade in the first half, towards the end of the first half of the NY session, or in the first half of the NY session, then I look to take a trade at the end of the first half of the NY session or the beginning of the second half of the NY session, which is around 11:30 a.m. EST or 12 noon EST. What's the ideal times to do a safe trade? Depends what you mean by a safe trade, right? Uh, a safe trade to it depends on your trade plan. A safe trade to me could be a risky trade to somebody else. A risky trade to somebody else could be a safe trade to me. So it depends. Are you a support resistant trader? uh, I'll give you an example. uh, if you're a support resistance trader, right, or if you trade something similar to what uh, I trade, the Asian sessions, right, IC markets time around bit after 2 a.m. EST, there've been amazing opportunities, right? I'll show you. I'll show you one today. I'll show you what happened today. Price. This is the. Where's the market open? Yeah, this is the market open, right? Price formed 30-minute resistance. This is the this is the EMA is the liquidity level. These are liquidity levels here. The EMAs are one of those liquidity levels. There are two EMAs. There's a 30 and a 60. The 60 is the slow one, obviously. Price tapped the EMA, formed 30-minute resistance. Perfect. Okay, this is perfect. Tap the EMA, form 30-minute resistance. So this candle closed at uh, 3:30 a.m. IC market server time, right? So that's why I said starting from around 2 a.m. or 2:30 a.m. IC market server time, right? That's an Asian session trade. The first Asian session opportunity, the first. There is a second one as well. We'll talk about that later. There's a first Asian session opportunity, right? And that's around starting around 2 a.m. or 2:30 a.m. IC market server time. So this candle closed at 3:30 a.m. IC market server time. That's when this one opened. So now, if you go to the 15-minute chart, yeah, this was the. What was it? Sorry, let me put a line there. Okay. Yeah. So this was the close of that 30-minute candle, right? The candle closed here. So let's delete this now. So you look for, I look for I look for at least two M15 highs to be taken out. This is the M15 time frame, right? So this M50, after this candle closed, so this was the close of the candle. This candle broke this side, this candle broke this side, right? So draw the fib based off this candle from the most recent low to the highest high in that range. So it would be this high, and look at that. Tap the optimal level. That's your entry. Your stop loss is there, just above it, about 18, 19 pips. And you can take your TP at the next liquidity level. What's the next liquidity level? 3350. Price moves from liquidity, from one liquidity to another liquidity level. From one liquidity to another level. Once it grabs enough liquidity at a liquidity area, it goes in the opposite direction. That's all price does every day, right? So once you understand the importance of liquidity and how to identify it on a price chart, trading becomes, I don't want to say the word easy because trading is not easy, but it becomes less complicated. You start seeing things a little more clearly, right? So again, to answer your question, what is the time to take a safe trade? To me, that's a safe trade. Now, that might not be a safe trade to somebody else. If they're not trading this system, if they're not trading the EMAs, if they're not trading liquidity levels, if they're not trading support resistance, that might not be a safe trade. That might be a risky trade. So it depends, to answer your question, it depends on what your trading system is, what your trade plan is. To me, this is a safe trade because it's low risk, high reward potential, and a high probability trade, right? And because the reason for, and let me explain that further, I always look for these three elements or these three features in a trade: low risk, high reward, high probability. Let's talk about the last one first. The high probability comes when it's a pullback trade, right? And that also leads to a low risk trade. So I don't take a breakout, right? Because I'm not a breakout trader. So there are some traders who trade the breakout of a candle, of a 30-minute candle or a 15-minute candle or 1 hour, whatever, right? That's a breakout trade. To me, I see that as a low probability trade because price can break out and then pull back immediately, right? And then you're in drawdown. So that's a low probability trade, right? So I wait for a high probability trade. High probability always is with the pullback, right? And that's why you draw the fib and you wait for the pullback to come here. So you don't enter here when the next candle breaks the low, because when this candle opened, this is the new 30-minute candle. When it broke this low, it immediately pulled back up, right? This to take the breakout is the risky trade, the lower probability trade. This one pull back to the optimal, that's the high probability trade, right? And the pullback also offers a lower risk. So now my risk is from here to here, 17, 18 pips, right? And the profit potential, the high reward, is price moves on liquidity to liquidity. So we've tapped a liquidity level. We can ignore 3367 as a liquid level because this candle is already closed below it, right? This 30-minute candle or the 15, 30-minute and the 50-minute both closed below 3367. So we can ignore that now. And the next liquidity level on the chart is 3350. So that's your first TP level. And your second TP level, if at all, is the next liquidity level, which is the liquidity candle below that, right? Cool. You're welcome. You're most welcome. Yeah, so I'm waiting for, as I said, a pullback, 30-minute resistance to form to take a trade. If 30-minute resistance forms here, I won't take a trade because there is a zone here. The zone hasn't broken yet. So I'm going to let the zone break. Just let price do its thing. If it needs to form resistance here and break this liquidity candle and this zone, let it do that. I'll wait for the pullback. Just you got to patiently wait for the pullback. All right, I'll be back in a couple of 2-3 minutes, maybe about 3-4 minutes, and we still have about 27 minutes for the candle to close. So it's a long time. There's a lot of waiting today. Because if this structure happened here, perfect, I would have taken this trade here. 30-minute resistance formed. If you've been on my streams long enough, you would have seen that I take this setup often. We reject the London high, a candle closes back inside under the London high, below the London high. 30-minute resistance form and tradable 30-minute back candle closes, and then the pullback, this candle pullback to take the trade. So if this is a perfect setup for me, right? It happened at the EMA and at the liquidity candle and at the London high. So if it happened here, I would have taken this, trade, 10 times out of 10. But it happened before pre-NY, so I'm not interested. So I'm going to wait, and we are pushing down. We are pushing down, and it's a good sign because if you push down and break the liquidity candle low, then that's a good sign that we could wait for the pullback to take the trade to come down. We have more profit potential if that happens. Okay, I'll be back in a couple of minutes. Yeah, I'm still holding Wednesday's entry. Yeah, I'm still holding Wednesday's entry. Let's see. Push to 3328 is my final TP level. Yeah, there. It's about 680 pips to get there. Entered here, right here. Yeah, about 670, 670, 675 pips to get there. This is a reaction. This reaction is to this 30-minute support formed here, right? Clear 30-minute support formed here. This is in the London session from the liquidity candle, 30-minute support formed. This candle closed at 10 a.m. EST, opened at 9:30, closed at 10 a.m. If you go to the 50-minute time frame, Yeah, this was the candle close, 30 minute. Yeah, close. This one opened at 10. Yeah, so yeah, this was the candle close, right? So this candle broke this low, this candle broke this low, right? So this is the lowest low in the range, and this is the most recent high. There you go. That's the reason price is pushing up. It tapped the optimal entry, and it's pushing up. Price is never random, never random. We tap the optimal entry. That's your zone, your drawdown zone, about 23 pips, and we pushed up 49, 50 pips, 55 pips. 521041. 521041. Yeah, that's the reason for it. Perfect. Tapped, pushed up. But I don't. I mean, if you're a scalper, you can take these trades. I don't. I'm not a scalper, so I don't take these trades. And also, as I said, the high time frame for two reasons why I'm not looking for buys right now. The weekly time frame is very likely to close. It is going to close bearish, so there's no need to try to trade against the weekly time frame on a Friday. You can trade against the weekly time frame on any other day because it has time for the weekly candle close. But on a Friday, when you see that the weekly candle is going to close bearish, you don't want to you, you don't want to bet against that weekly candle, strong bearish weekly candle. That's the first reason, and the second reason is weekly, daily 4 hours are all bearish. But if you're a scalper, this is a perfect trade to take. We're coming here to 3350, 67 pips. 3375, 3385. 3375, 3385. 37. Way up here. Did you say 3375, 3385? That's up here. Oh, that's yeah, maybe, but that's 300 pips away. I doubt price is going to come there. I don't think price is going to move up 350 pips right now. At least not in the first 2 hours of the NY session. There's no news there's no news right now. So there is no reason for price to push up 340 pips or 350 pips right now. 350 pips to get to 3385 is yeah, there. 400 pips, 420 pips. I doubt it. I don't think that's going to happen. There's no reason for price to go there. Because for price to get there, you're saying, let's say 3375. Let's take, yeah, 3375, the lower number. Let, let me explain objectively or logically why I don't think price will get there right now, at least in the next 2 hours. That's 3375, right? That's the price level you're saying, 3375 and 3385, which is it's another 100 pips away, right? The reason it can't get there right now in the first 2 hours of the yeah, so 3375, two reasons, right? Main two reasons. There is no news to push price up 300 pips, 290 pips, right now, which means from this optimal entry, we have to get there, right? There is no news right now. It could happen. There are no certainties in trading, but there is no news right now from this optimal entry for price to push up 325 pips, right? That's a big move up. Number two, for price to get up to that liquidity candle, it has to pass through all of these liquidity levels. It has to close above 3350. It has to break this liquidity candle high. By doing that, it has to go through this liquidity level, the EMA here, which is down here. It has to go through that. Then the liquidity candle, then the next EMA, then this 3367 weekly SR level, and then get to that, right? So 1, 2, 3, 4, 5 liquidity levels to get to the sixth one. Can happen in 2 hours for the duration of the stream or the duration of the day today. I doubt it. I doubt it. Price has to have a lot of volume, and volume comes with a lot of volume comes with a news event, with a very big news event like NFP, CPI, interest rates, FOMC press conference. These are the four big ones, right? Those four can bring in a lot of volume for this to happen, to go through 5 liquidity levels. That's possible. But today on a Friday, that's the reason. I doubt that it'll get there. I would, I would, I would more or less what I would envision right now. This is price is pushing down further. We're not going to, yeah, we're going to probably come to 3350, but then we're going to push down from that because that's the first liquidity level. See what's happening on the 5 minute. Yeah, we're trying to push back down. Yeah, there is no 5 minute bull candle either for price to push up. There is no signal here. If you're going to see a reversal or a pullback, you'll see a big 5 minute bull candle, something like this. You'll see something like this form, a candle like this form here, right? And then price starts to push back up, and that's not happened. So what I envision is what I said. I would like to see this liquidity candle break, this one right here. Price break below 33, 39, 83. Once you break that, we delete that liquidity candle, right? Then price is broken there. Then a pullback. Then a pullback and resistance forms to take the sells to come down. That's what I envision happening. I may be wrong, but that's what I envision happening. Because if you break this, if you break below this low, let's say maybe here, we come here, right? At that point, prices, yeah, still 160 pips, not enough. So we'll have to wait for 30-minute resistance to form. At least that's what I will do. I will wait for 30 minutes. If prices, I've shared this. I don't know whether you have a copy of this or not. If you don't, you can join the group. It's free. You can join the group. If you aren't in the group, you'll find a link in the video or in my YouTube bio. You'll find a link to join the group, and you'll find this PDF, right? So these are the 4 setups. We spoke about all of these 4 setups with examples this week. So if you watch, I think Monday and Tuesday stream, I think those 2 days, I spoke about these 4 setups very clearly with examples, right? So if price is more 200 pips or more below the EMAs, then you can wait for 15-minute resistance. Or 15-minute, yeah, you can wait 15-minute resistance and a 15-minute tradable back candle to close, right? But if price gets here, it's not 200 pips away. So it'll need to go probably further down, right? At least there for us to pull back and then wait for 15-minute resistance. Yeah, you can join the group. It's free. Just go click on the link. It's a Telegram group. And then if you join the group, there is a ton. Just once you let me just show you the group. Let me show you what it looks like here. This is what the group looks like. These are the topics in the group, right? Start here. This is where you go. Go start here. Once you go click on the link, you'll get to the group. Go to start here. Go click on that, and read this. Start right at the top. Start with my first post. And then read, this is the most important bit, read this post here, right? Read this one. That's, that'll tell you how to navigate the group and where to go to find what, So just go read that section, and then go look in these topics. There is a lot of educational material in here. If you want to understand more on risk management and risk sizing, go download this Excel sheet. This is the correct lot size to use to not blow your account when you're trading. If you're using fixed lot, right? Um, Anything on risk management, you find here in this topic. Go read the questions the other traders have posted and my answer. Yeah, this is not, there is no reversal here. If there was, as I said, you'll see a 5 minute bull candle close. Let me show you what a reversal looks like, or a strong pullback looks like. I don't want to say reversal because this is not a reversal level. You'll see something like this. Look at that on the 5 minute. See this bull candle right here, or this candle right here, this candle, this candle, this candle. You'll see something like that. One of these candles, like this bull candle, this one, this 5 minute bull candle, this one, or this one. You'll see something like that, or even something like this, or something like this, right? Or something, yeah, a big bull candle you'll see. Uh, and there isn't one here. So that is why, hence, that's why price is coming back down. Yeah. Still about 10 minutes for the candle close. It seems like we are forming 30-minute resistance here. Um, yeah, but I'm not keen on taking a trade here because we got a liquidity unless we break this. Unless this 30-minute candle breaks below this low. If this 30-minute candle breaks below this low, yes, then I'll look for a pullback to take a trade because then we can delete this demand zone here. If you break below this low here. It all depends on where this 30-minute candle closes. Right now, you gotta wait because this 30-minute candle still has about 8-9 minutes, so you can form a 5-minute bull candle can push up from here, right? A 5-minute bull candle can push up, and then we can start to pull back up. So it all depends. You got to wait for this 30-minute candle to close. You can't do anything. You can't even make a plan. You can't even. I can't. Not when I say you, I mean I. I can't even make a plan or decide or have an idea of what to do unless this 30-minute candle close. You got to wait for this 30-minute candle to close. Yeah, I would recommend watching about, let's say, 10 streams, past 10 streams, or maybe pick, let's say, let's say pick the month of April, for example, or March, whatever, pick any month you like, right? And watch 10 consecutive videos, right? So two consecutive weeks based, two trading weeks. So let's say, for example, you pick April, right? Where is it? Let me just go here. 1 second. Mm. 1 second, let me show you. Yeah, right. So pick, let's say, for example, April, right? March, Feb, whatever month that you want to pick. Um, May, June, we've not had a lot of volume. At least May, we didn't have much of volume. So April, pick maybe, where is this? When is this? A month ago. Yeah, April, right? So start April, yeah, NFP week, right? That's the start of April. This is the start of April, right? NFP week. It always starts with the week, NFP week. Then the next week is CPI week. So you'll see CPI week written there. So start here, right? This is perfect to start. So start um, April. Let me give you the date. 31st of March, right? Start 31st of March. Um, yeah. How you can know that it's a new week is because the picture changes, right? So this is a new week. So for that entire week, that's the picture, or the whatever, the screen, the opening screen is that, right? So start here where the date is there you go, 31st of March, and do 10 videos, just 10 videos. Watch 10 videos. Starting 31st of March, watch 10 videos. That's if you want to watch April. You can go watch any any month you want, right? There are what, 169 videos here. You can go watch any of them, but all I'm saying is watch um, 2 weeks or 10 consecutive uh, live streams, because that'll give you an idea of how the zones are drawn, how to start with, wait, how the daily time frame is analyzed, then how the zones are drawn, right? That's the next step. Um, and then after the zones are drawn, how I find liquidity candles. And then the fourth one is what I visualize and what I wait to see printed on the chart, right? I'll say that again. How I break down the daily time frame, right? What I expect to happen for the day, and if it's a Friday, then we look at the weekly as well. Second is I draw 4-hour zones or 1-hour zones, depending on how the candles are. It's usually 4-hour zones, and then I look for liquidity candles, and then we also do the Asian high, Asian low, London high, London low. And then the fifth one is after all of that is done, after I've analyzed the chart, that takes about 20 minutes, 25 minutes. Then what I visualize and what I expect how I expect candles to print on the chart. That's the fifth. So that's my thought process. So if you watch 10 consecutive videos, you will see that it's a repetition every day, and then you'll understand how I think, what I look for, and what I wait for patiently to happen, right? And then if that happens, then I take a trade. Yeah, I mean, if it helps you, great. If it helps you, it's a very, I take a very systematic approach to trading. Uh, this is not the only system. I don't say that this is the only system. There is no such thing. It depends on the trader and your personality to find a system that suits you. There are hundreds and hundreds of systems out there that work. Okay, it depends on you have to find a system that suits your personality and the hours that you can trade. Right? I have a 2.5 hour window every day to trade. That's it. And that's why I have this system, because this works for me. I'm a session trader. So 2 hours, 2.5 hours is my window. If I take a trade, if I get a trade within those hours, I get it. If not, then I leave. But I do sometimes come back to the chart when I do give out a setup on the streams. I do come back to the chart maybe an hour, hour and a half later, and I say that I'll be coming back to the chart maybe an hour later, hour and a half later, 2 hours later, to see if that setup, if the candles print that way, and then if it does, then I take that trade. And then I come back the next day. I always start the next day with a recap of either the trade that we've taken during the stream or a setup that I've given during the stream, right? Like just like we did today. I gave out the setup on Wednesday for FOMC, and then we came back and we did a recap and we saw that the trade worked. And that's what I do every day. Well, I recommend whatever system that you finally choose to trade, right? I mean, you can choose. You can even trade a EA, a robot, indicator. It doesn't matter. You can trade anything and you can be profitable. But I will say two things that are super important to success, no matter what system you trade, right? It could be supply demand, support resistant, it could be Fibonacci, it could be EMAs, it could be anything. It could be a robot that gives you signals, reliable signals. It could be an indicator that gives signals. It could be a robot that you're trading. I'll just give you two things that you should do, no matter what system you trade. Number one, understand liquidity, right? Understand liquidity. That's this. You can take a screenshot of this. Um, you'll find this in the group as well. You'll find this in the group in the link. It'll be there, or you can take a screenshot of this. Understand liquidity, right? The purpose of liquidity. Understand it. These are 5 levels of real liquidity, right? The high liquidity candle. If you watch my streams, as I said, go watch 10 streams, and then these all these 5 will make perfect sense. High liquidity candle, or the BRNs, or psychological round numbers, um, weekly support resistance levels, and the EMAs, right? So understand this liquidity, the purpose of it, and how to identify it on a price chart. How to identify these, learn how you'll have to practice for that, to how to identify these on a price chart, right? And the reason for that, okay, is because that's what price does every day. It moves from one of these liquidity levels to another, right? Look, for example, uh, if price pulls back here, so this is a liquidity level 3350. If it finds enough liquidity at 3350 to push down, it'll create market structure. It'll create some sort of resistance, 30-minute or 50-minute resistance, and it'll push down. If it doesn't find enough liquidity at 3350, it'll push up, or it'll move up to the next liquidity level, which is the EMA, right? Which is there, right there. You can see that right there. It'll move to the EMA, right? If it gathers enough liquidity there, then it'll create some sort of market structure and it'll push down. If it doesn't find enough liquidity there, it'll move to the next one, which is the liquidity candle, right? You get the idea, so on and so forth. If it doesn't find enough there, it'll move to the next EMA. If it doesn't find enough there, it'll move to the weekly SR level. Once it finds enough liquidity at any one of these liquidity levels, it'll go in the opposite direction. That's all price does every day, right? I'll give you an example of what happened during FOMC, right? The trade that I gave out on Wednesday and the trade I took. So price came here to this liquidity candle, formed 30-minute resistance here, right? And pushed down. But we were ranging. We didn't break this high. We were ranging. We didn't break the liquidity candle high. We didn't come back to 3,400, which is the next liquidity level. We stayed below this 30-minute candle high, right? And we just ranged. We moved sideways until news. When news came out after the interest rate decision and FOMC, during the FOMC press conference, price came up, respected this 30-minute candle high, right? So which means it found enough liquidity at this liquidity candle here on the left that we had marked, several days before. It found enough liquidity at that liquidity candle, and then it pushed all the way down, right? Then it came to this liquidity level, It found enough liquidity there, it created structure, pushed back up. You see what's happening? So that's all that price does. It moves from one liquidity level to the next liquidity level, right? That's the first point. The second one is risk management. When price goes, you got to have a stop loss, obviously. You got to have a hard stop loss on your trades. But when price goes into drawdown, when you start seeing negative balance, you got to manage risk. So if you again go watch 10 of my streams, you'll see how I do that in the live market. I give out, I put red lines, horizontal red lines, and I say this is a price level. If price breaks above, if you're in a sell trade and breaks above that red line high, close partial positions. You can choose to close 30%, 40%, 50%, whatever percentage that you're comfortable with. And I say if a 15-minute candle closes above that red line, then close another 50%, 60%, 70%, or even close the entire trade. Because then it's likely, very likely, the more and more that happens, it's very likely the price is going to go hit your stop loss. So if you're risking, let's say, 2% or 3% on your trade, why lose that entire 2 or 3%? Keep your loss small. Lose instead of if you're risking 3% on every trade, or if you're risking 2% on every trade, try to lose 1% instead of 2%. Try to lose 1.5% or 1.6% instead of 2%, right? By doing that, you'll make your losses smaller and your winners big. It's simple math. And if your losses are small and your wins are big, that means automatically, even if you're trading a 1 RR system or a one risk to reward system, your risk to reward is no longer 1 RR. It's probably 2 RR or 2.5 RR because you're keeping your losses small. You're closing partial positions when price gets in drawdown, right? So uh, those are the two lessons I would give anybody who wants to be consistently profitable in the long term in trading. Two lessons: understand liquidity and practice risk management every day, right? These are the two things: understand and learn to identify liquidity, and then number two, uh, practice, risk management. Yeah. Now there's a 5-minute bull candle. See this? 30-minute candle is closed. We've closed bearish. We've closed below the Asian high. We're very likely going to push down. We're very likely going to push down. But before we push down, we might push down, get a pullback up to 3350, and then begin to go back down, right? Because you have a 5-minute strong bull candle from the Asian low now, right? Anyway, these are, if you're a scalper, these are fine. I'm not interested in any of this kind of lower time frame price action. I'm not. I'm looking for two things that I've very clearly said: for a price to pull back, create 30-minute resistance, and then to take a trade down. Here, even though there is a pullback, we form 30-minute resistance. I'm not keen on taking a trade because there is no room to trade, right? There is no room here. If price had pulled below this, broken this zone, then we could have deleted this zone, and then there is room to trade, about 100 pips to move, 100, 150 pips, about 125 pips to move down. But we haven't broken the zone yet. So I'm not willing to take a sell from here for 30, 40 pips. Makes no sense. Okay, I'll be back in a couple of minutes. I might end the stream in about probably 10 minutes. I've given out the two ideas. I will come, once I come back, I'll explain the ideas again, what to look for today to take a trade, right? What exactly to look for, how candles should close, what candles to wait for, and how exactly they should close, and where you should wait for them to close to take a trade, if at all there's a trade today. Yeah, see, price is pushing up after the 5-minute candle form, right? We spoke about this about, I think, about 10 minutes back. We spoke about price has to form a candle like this to push up, right? And if you're a scalper, these are trades that you can take. I don't trade these. It's a 5-minute candle from a liquidity level and also from the Asian low, right? After price, yeah, see, this one closed at the Asian low. This is a 30-minute support. This is the optimal entry level. I drew all of this. This is all explained. I'm not going to go over that all over it again. And then the 5-minute candle closed, and then see price. I said price will push to 3350, and it did, right? But I'm waiting for sells, and I'm waiting for price to create 30-minute resistance is formed. Now that 30-minute resistance, we've got to wait for this 30-minute candle to close. Got to wait for this candle to close. Now, here's what I'd be interested in. Here's what I'd be interested in. One of two scenarios. Okay, one of two scenarios. Price hasn't broken this. It hasn't broken. I would have liked to see price break this to push down, but it hasn't. All right. Let's just see how many times it's come down here. 1 second. Let's see. Okay. Once, twice, 3 times, 4 times. All right. Price has come to this level 4 times. Let me just zoom in so I can explain it clearly. There is a liquidity candle here on the left, and there is a zone here, right? You can see this dark green box. That's where we've drawn the zone. There's a rally. This is on the 30-minute time frame, right? There's a rally, a base, and a rally, right? This is the leg out. This is the base. These three candles are the base, and this is the leg in. And the other reason why we're looking on 30-minute is because price has crossed a BRN, right, or a psychological round number, which is 3350. So whenever price crosses as a weekly SR level or a psychological round number, you have to go down to the lower time frames, so the 1 hour or the third. That's the only time you go down to the lower time frames to look for a zone, right? And we see a perfect zone here, aligned with our 4-hour zone, aligned with the liquidity candle, a rally, base rally, right? Now, that's the low of the zone. That's the top of the zone. That's the zone, right? It's about a 85 pip zone. Price has come once into it, hasn't broken the low. We've respected the low. So this is the first visit, right? Then this is the second visit, third visit, fourth visit. When price starts to come back for the fifth time, if it does, it's going to push through. And we're going to be heading to 332, right? Now, price didn't break it. It again pushed up from here, which is fine. We've come past the 3RR level, 3350.73. Here's what I'm going to be waiting for. One of two scenarios. 30-minute resistance is formed inside NY hours, NY open, right? Great. If a 15-minute resistance forms here and a 15-minute tradable back candle closes, I might be willing to take sells, but it has to close below 3350, not above it. The reason not above it is because 3350 is a liquidity level, right? Like for example, like I say this all the time, think of starting your car inside your garage and trying to drive forward. If your car is parked in front of the wall of your garage, right? If it's stopped in front of a wall, you're hitting the accelerator and expecting the car to go forward. It can't. It's got to go hit the wall, and that's the reason I wouldn't take a trade just above 3350, right? At 3350, below it is fine, but not above it because prices going to come and hit this barrier 3350, right? So again, I would like to see 15-minute resistance form and a 15-minute tradable back handle to close. Ideally to close either up here, and that's fine. If it closes up here, you can take the trade. You have a long way to go until it gets to 3350. That's fine. But if it forms here, then I'm not going to take a trade because it's like 10, 15 pips away, right? So if it closes below, then I'll take the sell to come down, back down. That's fine. If from here, either it needs to close below or it needs to push up here and create a 15-minute tradable back handle close. If not 15-minute, then 30-minute, right? So if price pushes further up, 30-minute tradable, I'll wait for 30-minute resistance to form and a tradable 30-minute back handle to close to take the trade to come down. Again, I will not take a trade just above 3350. I'll either look to take a trade from here if that setup forms here, or if the setup forms here, then it needs to close below 3350 so that I can take a trade from 3350 or just below it to push price down, right? And if it pushes price down, then it's coming here for the fifth time into this candle, into the candle that we saw on the left, into that zone that we saw on the left. And when it comes for the fifth time, it's very likely going to break and head down to 3332, right? That's the idea. Those are the two scenarios. I hope it's clear. Any questions you can always post in the chat. I'm going to be here for maybe another 5 minutes and then I'm going to end the stream. But the setups that I've explained are the setups that I'm going to be watching for, right? The two sell setups that I've explained are the two sell setups that I'm going to be waiting for it to be printed on the chart to take that trade if it happens. If it doesn't, fine, no problem. We just come back on Monday. Right? And a buy idea. So those are the two sell scenarios, the two sell ideas. The buy idea, if there is a buy, is to wait for price to push down, right? Maybe below 3332. You got to. Okay, so the estimated time for, let's look at the 4-hour candle close. Yeah, I would wait for the 4-hour candle to close for either, right? Don't do anything now. There is about 39 minutes for the 4-hour candle to close. I would wait for the 4-hour candle to close, right? Possibly with the close of the 4-hour candle, you might get a trade. So I would wait for the next 39 minutes, wait for the 4-hour candle to close to do anything. For the buys, you could be possibly waiting until London close. And that's what I said. If you remember the analysis that we had, the two predictions for the weekly candle, how it should close. Keep that in mind. Go watch the first 10 minutes again. If you can't remember it, watch it. You can write it down, the two predictions. One of those two, I'm waiting for one of those two to play out, right? So for the buys, I'm waiting for price to push down, come to this demand zone, the daily demand zone, which is a decision area, around 3332 or below that for buys, right? For price to push down at least another 250 pips and then buys, right? That's the buys. But the buys might come, therefore, because it has to move 250 pips or 250 pips or more, the buys will possibly come in later on, if at all. If it plays out, if the setup plays out, it could happen later on. And later on, I mean around 11:30 a.m. EST, 12 noon EST, or possibly even after that, right? But the sell scenarios, just wait for the 4-hour candle to close before you plan to take any sells. Just wait for the 4-hour candle to close. Because we could be coming above this. Now, again, just remember what I said about liquidity. Price came to 3350, doesn't seem like it's finding liquidity, enough liquidity to push back down. Now it's coming there. It came to the EMAs. Is it going to find enough liquidity here to push down? If not, it'll push to the liquidity candle. Is it going to find enough liquidity there to push down? The moment price finds enough liquidity, you will see candle structure form. You'll see structure. You'll see 30-minute resistance form and a tradable 30-minute back candle close. That's your sign to get in on a trade. And then again, when you get in, you don't go full margin on these trades. I risk 2% on a trade, 2%, 2.5%, 3% at the most on a trade. That's it, right? 2 to 3%. On average, 80% of my trades, 85% of my trades are 2%. Because you got to always remember there is no matter what happens, even if price comes to liquidity, and you get your and you see candles print in your direction, you have 30-minute resistance form, you see a tradable 30-minute back candle close in your direction, all of that, there is still a probability that that trade couldn't work, right? That may not work, right? Every trade has a probability of working or not working. So you got to always keep in mind that trade that you take today or the trade that you take, next week, even if it meets all the rules, there could be a chance where it may not work. Yeah, you can just look at that Excel sheet. I would recommend the Excel sheet to anybody who has questions on lot sizing with their accounts. I would recommend the Excel sheet, right? Let me just open it here and then we'll end the stream. Um, if you go to risk management, if you go to risk management, it's right here. Um, let me open it. I have it. Yeah, here you go. That's the Excel file, right? So if you download that, open it. Now it's very simple to understand this, right? Average stop loss between 30 to 50. It's based. This is a fixed lot size guide, right? It's a fixed lot sizing guide for day traders. If you're a day trader or a session trader, this is a fixed lot size guide. If you're trading a system that has a stop loss between 30 to 50 pips, right? Now the reason, sometimes my zones are larger. I have a 100 pip supply zone or 150 pip supply zone or whatever. But even if that's the case, because I wait for the pullback on a trade, I wait at the optimal or sniper entry at a trade, um, the zone becomes smaller, right? My entry area is a lot smaller, right? And then even if that entry area is still about 70 pips or 80 pips, I always put a red line on a 15-minute support or resistance level, right? And that red line is my mental stop loss of where I'm going to manage risk, right? So that is always below 50 pips. Always below 50 pips, right? So that is why it's the average stop loss I say is about between 30 to 50 pips. Now, here, if you trade these lot sizes, which means you're risking about 6%, it's very likely you're going to blow your account. It's only a matter of time, right? If you trade these lot sizes right at the right side of your screen, it's unlikely you will ever blow your account if you take 1 to 2 trades per day, right? If you're taking 30 trades a day, then of course you can blow your account. If it doesn't matter what lot size you take, right? So if you're trading a 4K account, um, I would recommend this is very low risk, right? It's like 0.08, or you can take 0.16, right? That is also okay risk, right? And if you are good at managing risk, if you know how to manage risk when price goes in drawdown, if you really are good at managing risk, like if price gets into drawdown, as soon as you start seeing a negative gain on your account, and you are able to identify lower time frame support resistance levels very accurately, and if price starts to break those levels, and you're good at immediately closing partial positions, right? So there's a lot of ifs there. If, then I would recommend this column, right? But I would never recommend this column. I would never recommend this. So on a $4,000 account, 0.48, I would never recommend it, right? But this, I would recommend only if all of those ifs I said, if you're good at all of that, if you're good at risk, really good at risk management, then you can trade 0.32 on a $4,000 account. Otherwise, I would say stay here, stay in this lane or stay in this lane, and you're golden. Okay. Yeah. So we've come here. All right. So this is the NYSE Open. I'm going to end the stream now. We've come past the EMA. We're very likely coming deeper into the liquidity candle, possibly to this EMA. Let price run, doesn't matter. Let it price. The further it goes, better. Once it gets to this, forms a structure, then you can look to take the cells to come down. Right now, see how this worked. We formed 30-minute support. This is a tradable 30-minute bull candle close. I drew the fib. Look at that trade pushed up. Now I was not willing to take that trade. There are trades, there are so many opportunities in the chart, but I'm not willing to take all of those trades. All those trades are not my trades, right? So I'm clearly looking for a sell trade because of the two reasons I mentioned. The weekly candle is going to close bearish, and the weekly, daily, and 4-hour time frames are all bearish, right? So the 4-hour candle is going to close in 30 minutes. Yeah, 30 minutes, but we are forming a bullish candle here. Right, we are forming a bullish candle here. You got to wait for the candle to close. I would recommend don't do anything now. I'm not doing anything now. I'm going to wait for the 4-hour candle to close. You got to see how this candle is going to close. Price could push up here to this zone here, right? 3367 as well. That zone is also marked on the chart. 3367. We could push up here. That's possible too. And we have a weekly SR level right there, 3367. Right? 30-minute candle close bullish, strong bullish candle close. Yeah, I'm not doing anything. I'm just waiting. We've come back to the London high. Yeah. So again, if we reject the London high, 30-minute back candle closes below. Now, since we have a big bullish push up, I would not, and since 30-minute support has formed, I will not be looking for the 50. I will be not looking at the 15-minute time frame for support or resistance. I'll be looking for 30 minutes support or resistance to form. So I'll be looking for 30-minute resistance to form and a 30-minute tradable back candle to close to take the trades to come down. Right? Not 15-minute anymore. Why? Because 15-minute support has formed and a very strong 30-minute bull candle has closed, almost 145 pip candle has pushed up. So now I'm going to be waiting for 30-minute resistance to form and a 30-minute tradable back candle to close. After, I'm going to wait for the 4-hour candle to close, and then I'll have a look at it. So I'll probably come back to the chart maybe in about 45 minutes from now, and then 45 minutes to 1 hour, possibly about an hour from now, and then look at the chart. All right. Okay, that's the end of the stream. Yeah, margin is good, but you got to remember margin is a double-edged sword, right? It cuts both ways. It cuts both ways. So when you're in drawdown, even though you have a high margin, when that margin requirement exceeds, when you start going above the 50% level of that requirement, your broker will start closing your positions, right? The you got to understand the point of trading is not to take one trade, one big winning trade. It's not about hitting one home run, right? If you're if you understand baseball, it's not about hitting one home run. It's about staying in the game, keeping your account active, right? Keeping your account healthy at a certain amount, having a certain account balance, so that you can trade longer, right? I said longer, not more trades, but stay in the game longer. I'm talking about time duration. So stay in the game for 3 months, 6 months, 9 months, 1 year. Stay in the game longer, because if you stay in the game longer and you learn how, if you know how to manage risk and you know where to take your trades, then you'll automatically be profitable, because your losses will be smaller and your wins will be bigger, right? It's just simple math. So you got to stay in the game longer. So it's not about trying to take one big trade for the week and making some big bucks and being happy with it. Can you repeat the same thing every week? Maybe not, right? So it's all about staying in the game as long as you can. So if you've got a $4,000 account, how can you make this $4,000 account last for 6 months? That should be your first aim. How can I make this $4,000 account last for 6 months? Because if I can make it last for 6 months, then I'm going to benefit from having a decent account balance. I'm going to benefit from 6 months of learning, and in that learning, I'm going to learn how to manage risk, how to take smaller and smaller losses, and then I'm going to learn also how to have a runner, right? Like for example, a trade that I took on Wednesday, I'm still holding the trade, right? Now, if and I've got my stops at break even, so if price comes and hits it, no problem, because it's a runner. I've closed about 80% of my position. So I have 20% left, stops at break even. So if it runs to my final TP of 3328, good, excellent. That's a 675 pip move, right? I've gained on the trade, and that move, the gain on that move, if it hits my TP, my final TP, the gain on that trade is bigger than the 80% of the position that I closed, right? And that's called having a runner. So if you can if you can if you can make your account last for 6 months, then you're going to learn a tremendous amount in that 6 months. You're going to learn how to manage risk, how to learn how to hold a runner. You're going to learn how to understand. You're going to learn how to understand the principle of liquidity and how to identify it on a price chart. You're going to learn a lot of stuff, right? So it's all about how long can you hold your account for? How long can you hold it for? Right? That's the game. All right, been here for 2 hours. All right, so again, I've explained the setups, what I'm waiting for. I'll be back on Monday, 7:30 a.m. EST Monday. We'll draw our zones, and then hopefully we have a setup for the first 2 hours of the invite session. If you don't, then I'll give out setups like I did today for the rest of the invite session. Now, I've given out setups today. We're going to come back on Monday and we're going to do a recap and see if which of those setups worked, right? Keep in mind the weekly candle prediction, right? The weekly candle is going to close bearish. Is it going to close with a small wick or a large wick for the next weekly candle to fill? All right, see you guys on Monday, 7:30 a.m. EST. Take care. Have a great weekend. See ya.